Welcome back. Today we're talking about Fetch.Ai, SingularityNet, and Ocean Protocol. Is the artificial superintelligence coin in the Superintelligence Alliance actually going to happen? We're going to update you on that, and we're also going to discuss Goldfinch. As you guys know, Goldfinch is part of the real-world asset discussion, and it's backed by some of the leaders who have previously worked at Coinbase, and it's also backed by Circle, which is the issuer of USDC. And while I've stated previously, Fetch.Ai, GFI, I'm very bullish on, am I still bullish now post-halving? And what are the updates on these protocols? That's what we're going to discuss in today's video. So make sure you guys are subscribed to this channel. That way you never miss a new video, and give the video a free thumbs up. And I also want to hear what you guys think about all of this right down below. We're going to start with Goldfinch, and then we're going to go into this artificial superintelligence discussion. Is it actually happening? Possibly not. Yikes. So anyway, as you guys know, I was one of the first YouTubers that brought to light Goldfinch to my viewers. As you guys know, Goldfinch was under, I think it was under $1, and it was a very low market cap cryptocurrency. You can see right here. Let's pull up all the data on it from Asari. And so right now, the coin is at about $3.67, a $270 million market cap. When we started following this back in 2023, you can go look at my old videos on that. You can see that the price was 30, 40 cents. I think I sold, sometime at the beginning of 2024 when we did like a 4 or 5X or something like that, maybe a 10X. Because yeah, you can see it went all the way up to about $6, and we've come down a little bit. Now, number one, as I've explained, these lower market cap cryptos, these have the potential to move much faster to the upside, and they also have the potential to move much faster to the downside than a crypto like Bitcoin, right? Because think about it, Bitcoin has so much market cap and so much volume that if, let's say, a millionaire says, okay, I'm going to buy $1 million in Bitcoin, it's like less than 1% of the daily volume. Where if you're buying $1 million in Goldfinch, this could be significantly more of the daily volume than most of the other assets out there. And so this can move the prices significantly faster than with some of the higher market cap assets. And so while, yes, you have the potential to go much higher, you also have the potential to go much lower if people are selling. And so what we've seen over the last 3 months is Goldfinch has from March, we went from about $1.30 all the way up to about $6 in April, and we've been coming down ever since. Do I think that it still has a lot of potential to go higher? Well, we need to look at the data from the actual Goldfinch ecosystem, right? And by the way, this is a newer project, and again, it's backed by some pretty big people in the industry, like Circle and former Coinbase engineers. And so that makes me feel very comfortable with what's going on with Goldfinch, right? Especially that Circle and USDC are backing it. And Jeremy Allaire believes that this ecosystem is and Jeremy Allaire is the CEO and founder of Circle, USDC's issuer. He believes that this is, without saying bullish, he believes this is bullish, right? For real world assets. Goldfinch is revolutionizing the $1 trillion global private debt market by connecting USDC investors to proven off-chain credit funds and fintechs, so you can access stable yields with competitive risk-adjusted returns. So you can provide your coins for a yield, and what Goldfinch does is they lend the money out to, it's part of like what they call private credit, right? Private loans. And so they talk about over-collateralized fundamentals. Goldfinch has proven borrowers access $5 to $20 million loans from the protocol to drive successful business growth worldwide, over-collateralized with real-world assets and income. This is because in markets where financing may be slow or expensive, borrowers save by replacing inflated costs with efficient smart contracts and crypto liquid capital, become the bank accessing stable yields with high returns. So this allows people who want to provide some of their money for these loans or for these companies to actually borrow, right? So you can put your USDC to work. Returns won't disappear on Goldfinch. Use DeFi's global credit marketplace to harness sustainable APYs or yields from businesses creating real world value. The difference this cycle from previous cycles is previous cycles, remember, FTX, Celsius, Voyager, BlockFi, they were all just borrowing and lending to each other in a circle. So that is effectively a big Ponzi, right? One is borrowing from the other, who's borrowing from the other, who's borrowing from the other, who's borrowing from the other. And effectively, you're borrowing from yourself because you're in that circle of borrowing, right? And so if you're borrowing from yourself and then you're loaning to yourself through these other avenues, it just becomes very complicated and effectively it collapses, right? And this is very different what they're doing this cycle. All participants conduct KYC and accreditation for US investors to take part in Goldfinch. You can invest with USDC stablecoin, and borrowers provide NDA gated data room when proposing a borrower pool on the network, including performance, investment performance, transaction structure, and other documents. So they really try to do their best at due diligence to make sure that they're loaning to companies that are going to be able to pay them back. Now, keep in mind, this is not 100% because you never know, right? You can't get 100% success all the time. So they do have a small loss rate, and you can actually see on the Goldfinch app, you can see all the deals that they've made so far, 24 closed deals. Some of these are still being paid, and they show you the status, whether they're on time, late, or defaulted. You can see that one was in default for about $5 million last year. If we scroll further down, all the other ones have been repaid. Some of the ones that are still open are being currently paid on time. There's one that has a grace period for getting repaid, and there's another one that's late. So obviously, there's still some concerns about whether Goldfinch is sustainable, right? Especially if they're not getting the money back from a lot of these loans, which clearly they are getting the money back for most of these loans. But I would imagine that the Goldfinch team actually looks, it says, okay, what did we do wrong? Where did we go wrong? What can we do better for the next loans that we approve through the Goldfinch ecosystem to make sure that we don't have this issue again with either late repayments or defaults? I could be wrong on that. We don't really hear too much from the Goldfinch team. So again, a lot of this is just my opinion, and I could be wrong. So make sure you guys do your own research and never make investment choices based on what I say. And right now, you can see that if you wanted to actually loan your coins, they have an 8.5% interest rate, which is pretty good. I mean, in banks right now, you're going to get maybe 5.5%. USDC within Coinbase, and I think some other exchanges, you get about 5% as well. So 8.5% is higher. I would probably say the average investor probably should not be looking to make yield through these kind of loan programs because it is risky. But again, owning the coin is a different story. And if it's right for your portfolio, it's right for your portfolio. If it's not, it's not. I don't know. Right now, I don't hold any when I'm recording this video, but I am looking for entry points to get back in once we do see a floor form. Listen, guys, we're in the post-halving period right now, so maybe we won't see a floor form. Maybe we are just going to go straight up. I don't know. We'll have to wait and see. But I do think that we have some more time because when I'm recording this video, the Federal Reserve has not cut rates just yet. And this brings us to SingularityNet, Fetch.AI, and Ocean Protocol. Now, as you guys know, I'm also previously have been very bullish on Fetch.AI. We've been talking about Fetch.AI since 2023. I said to my viewers, I think that with the AI narrative picking up, we have a great opportunity here. August of last year, it was at 20 cents. Now we're over $2. So clearly it went up 10x. And the AI narrative in the middle of 2024 has kind of slowed down. It's died out a little bit. I think that it's just kind of restructuring, right? We saw like the big AI companies, C3 AI, NVIDIA making the chips, OpenAI. A lot of these companies had a lot of shakeups and changes occurring within their business and what the future of AI is going to look like and all of this. So I do think that we're in kind of like a lull period, kind of a reassessment of where these companies are going and what they're going to do and what their strategy is. And I think that because that's happening in outside of crypto and traditional financial markets, we're also going to see that translate into crypto as well with Fetch.Ai. But now we're in a different realm with Fetch.Ai, with SingularityNet and Ocean Protocol. Because earlier in 2024, we heard that these three protocols were going to merge into one, which is going to be called the Artificial Superintelligence Alliance, or ASI, and create one cryptocurrency. And we haven't really heard anything else about it. I mean, this is from April, where the ASI merger was approved. It says ASI announced the approval of the token merger, expecting to start in the coming weeks following the voting of these constituents, which is Fetch.Ai and SingularityNet. The merger is poised to position this ASI token into the top 20 largest cryptos by market capitalization, with an anticipated total value of $7.5 billion. Now, remember what I explained to you guys. Even if you combined at this time when they announced this, if you combined Fetch.Ai market cap, AGIX SingularityNet market cap, and Ocean Protocol market cap, all three of these combined was less than $7.5 billion. So I didn't really understand like where they came up with this number. Like all of a sudden your new coin is going to be worth $7.5 billion when all three coins were not before the merger. Didn't make sense, right? Didn't make sense. We also saw, based on this article from CoinMarketCap, it says here that the official launch of ASI was slated for May 24. Now, I'm recording this video before May 24, so maybe they are actually going to do it before May 24, but I don't think so. I looked at Fetch.Ai's Twitter page. I looked at SingularityNet's Twitter page. No mention of when this is going to happen. It seems like these different protocols are still doing their own thing, and it doesn't seem like it doesn't seem like they're actually merging, right? Like it's almost like this was just an announcement. And listen, SingularityNet is very closely tied to Cardano, right? Supposedly they converted their coin from AGI, which was on Ethereum, to AGIX, which was on Cardano, but it was just a native token. The actual real token was still on Ethereum. So they do have a connection to Cardano, and we know Cardano is big on making announcements and then nothing really panning out as excited as it was. I mean, we saw that with Boost Mobile, Dish Network, Cardano Africa. I mean, I can keep going on and on. So to me, I don't own Fetch.Ai, AGIX, Ocean Protocol. I don't own any of these. And I don't think I will, because I don't know what the future of these protocols are, right? They approved the merger. We don't know anything about the merger. We don't know when the merger is going to take place. They're coming up with this arbitrary number, $7.5 billion, for where the market cap is going to be. Listen, this could definitely work out. And I think it could be very bullish if they do merge these coins together. But what does this look like, right? What is the merger actually going to be, right? We don't even have any insight into that. What is the ASI coin going to look like? Now, this guy, who is the chairman of the ASI Alliance and CEO of Fetch, he said at the time, "We're thrilled to announce the successful conclusion of the token merger voting process. This marks the beginning of a new chapter in AI development, where our collective efforts will drive progress toward decentralized AGI and ASI. The mission is to create a decentralized AI infrastructure at scale, ensuring ethical and trustworthy practices. By combining their platforms, they empower developers and users alike, fostering a more democratic and transparent AI ecosystem." Ben Goertzel, who's the founder and CEO of SingularityNet, he said, "Our joint vision has always been to roll out beneficial AGI and then superintelligence in an open, democratic, and decentralized manner. The ASI token merger will bring us closer to that goal and strengthen the ability to challenge big tech's bid and control over AI." But we don't have any insight into what this means, right? Like, are their teams going to still be operating separately in their own silos or in their own verticals of whatever they were already creating? Or is this merging them together and they're going to be kind of starting all over? There's not a lot of insight into this. And this makes me a little bit concerned, because I think a lot of investors are looking at it as like, oh yeah, this is going to be great. And it could be. I'm not saying it's not going to work out. I don't think we have enough information on what this is going to look like for this to be investable at this point, right? Because also the coin, they're basing this market cap, which is going to be inflated. So for instance, let's say you buy Fetch for 225, and let's say when it merges, let's just say it's $5, right? So just slightly more than double. Okay, so ASI coin is going to be $5, and you get 1-to-1. So now you went from 225 to $5. Even if it's $4, even if it's $3, that's more than the value it is today. So what is going to happen, and this could be really bad from a sentiment standpoint and from a launch standpoint, especially that they're launching the new coin at a higher market cap than the other three coins combined. Like, look, Fetch.Ai right now is 1.9 billion. Singularity Net, let's pull it up. Singularity Net is, wow, this is slow. 1.2 billion. So that's about $3.1 billion so far. And Ocean Protocol, so we're at 3.1 billion plus 5. So it's about 3.6. We'll just say $4 billion, right? But it's really at $3.6 billion currently. And they're talking about this is going to be $7.5 billion market cap. So yeah, that is double. So if you have one coin in Fetch.Ai and it's going to be converted into one ASI coin, your valuation is effectively going to double. So there are going to be people and investors and speculators that are going to arbitrage this. They're going to buy the coin right before the merger. As soon as the merger occurs, boom, they're going to sell it, and the market cap is going to plummet from $7.5 billion to who knows what, maybe 2 billion, maybe 4 billion, I don't know. But it's going to come back to where the market thinks that the coin should be, which right now is under $4 billion because all three of those coins are under $4 billion. And because they're going to be speculating on this, I would imagine the coins are going to drop even more. And we don't even know what the tokenomics look like, right? How many coins are going to go to insiders, what the inflation rate is going to look like, is there going to be staking, what the mechanism is going to be. So that's where I get concerned about, because people who are investing for this new ASI coin, they don't realize that they're going to be counter traded by all these people who are just going to get in this trade for that arbitrage opportunity. So maybe they should have just made the market cap, whatever these three would be combined. I understand why they're not doing that, but keep in mind, you know, they're also expecting the hype to drive the narrative as well and drive the price movements and market cap as well. That's what I would assume. But right now, it's not investable. I mean, again, Fetch.Ai has gone from, you know, the October lows of, let's say, 20 cents all the way up to 225, so a 10x. I mean, anybody who hasn't taken profits yet, like, what is going on? Like, why wouldn't you take profits? And it actually went more than 10x because it went to 350, 310. So you went from 20 cents to 310, which is like a 15x in just like 5 months. I don't know why anybody wouldn't want to take profit on that. So yeah, I'm a little bit concerned about this. It just doesn't make sense right now. But again, these thesis and strategies that I am explaining to you guys, these are just my opinions. I could be wrong. And by the way, by the time you're watching this video, maybe my opinion has already changed on it, right? I understand why they want to combine these three coins into one, but I think doing it is, in a bull market, it's smart because, you know, there's money flowing in. And I would imagine we're probably not going to see this merger occur in May. We'll probably see it occur when the prices start moving, when the Federal Reserve starts cutting rates, when the economic activity in the global economy starts to seem a little bit better. So that's a smart thing for them to do. It just doesn't seem investable right now, right? It was investable 6 months ago, and it may be investable in 6 months from now. But right now, for me and my strategy and my portfolio, it's not investable. So when we go back to Goldfinch, I think is still, we have to continue to monitor and see where Goldfinch goes. I think the market cap is so low, it's probably not going to matter, right? Whether we're at where the prices we're at today, or we go down by 30, 40%, or we go up by 30, 40%, right? We're still at a very low market cap. If this does work out, it's probably going to be in the $1 billion market cap range. So that's still at least a 4x from where we're at, not financial advice. So yeah, Goldfinch, in my view, is still investable at this time. Fetch.Ai, Ocean Protocol, and SingularityNet are not. There's just too much unknowns. And for me, even somebody who could arbitrage that opportunity, right? Buy at 225, wait till they merge the coins, then it goes to $5, then sell the coin. It sounds great, but remember, there's a lot of people who are going to be much faster at selling than we are. And I do think that if they launch the coin at $7.5 billion market cap, when all three of the coins are less than $7.5 billion market cap, it's going to be a terrible launch from a price perspective, and it's going to crash, and a lot of people are going to lose faith, and then they're going to sell their coins, and it's just going to be a spiral downward. So that's a risk, a huge risk. In my view, it's probably smarter to wait for that drop to come after the coin merges, and then wait for a kind of a market correction overall in all the AI cryptos, and then kind of jump in. And also there's other AI cryptos out there that I think are a better play right now. Internet Computer is one of them. Render is another one. And we keep continuing to talk about some of these newer or fairly newer coins that are kind of making their way into the top 15, top 10, even Near Protocol, right? I mean, Near Protocol's founder is having meetings with the NVIDIA founder and CEO. I mean, to me, that's pretty big. The fact that Apple is using Render in their ecosystem and highlighting it in their like new product presentations, I think that's huge. Internet Computer, the fact that they're already displaying that they can run AI compute on the blockchain, this is huge. So there are other plays out there besides these three, and I'm going to be continuing to watch and monitor these coins, and I'd love to hear what you guys think. Do you think I'm just flooding, or do you think that I have some really valid critical points about these cryptocurrencies? Let me know down below, and don't forget to give this video a free thumbs up. I'll see you guys tomorrow or whenever I post another video. Crypto on.